Good morning and welcome to Market Insights. I am Lavina Emma. It's a cool Friday morning with the cool showers that just poured a few minutes ago. So today on the program, we're going to be discussing the transactions of the floor of the stock exchange from this week. That's from Monday, 29th April to today, Friday, 3rd May. Now, how did the week fare at the stock exchange? How was trading like? So, the all-share index appreciated by 0.35%, settling at 98,225 from the previous close of 97,962. Now, this brings the year-to-date to 31.43%, which is the month-to-date negative at 5.97%, and the week-to-date negative at 0.16%, respectively. So market capitalization closed at 55.553 trillion naira. An aggregate of 552 million units of shares was traded at over 9,350 deals, which was valued at over 14 billion naira. Overall, it's been a week of cautious optimism for the Nigerian stock exchange. While some pockets saw losses, key indices rose and the broader market sentiment appears to be improving. So this morning, my guest and I will discuss how the NGX traded this week. In addition, we'll also talk about the 63rd Annual General Meeting of the Nigerian Exchange Limited with its new GMD, Temi Popola, and the changes that were effected at the Annual General Meeting. Now, before we go further into today's program, let me introduce my guest. He's joining us virtually this morning, and his name is Dr. Paul Uzum. He's a chartered accountant and a chartered stockbroker, and he's currently the director in Halo Capital Management Limited. So welcome to Market Insight, Dr. Paul Uzum.
Yeah, thank you.
I'm glad you're on the show. And how are you doing this beautiful Friday morning?
Yeah, I'm fine. The market is looking good this morning, so of course I'll be happy as a player in the market. So nice day.
Okay, that's good to hear. Okay, let's talk about the NGX, the 63rd Annual General Meeting, which held on Monday, 29th April. I understand lots of changes were made. We had the ratification of the Group Managing Director, Mr. Temi Popola, and also some announcements from the Chairman of NGX, Alhaji Dr. Umaru Kwaringa. So let's just touch briefly on the issues that were discussed at the AGM, at the 63rd AGM of the NGX.
Okay, yeah, I think the main issues that came there was one, the ratification of the payment of dividends, approval for payment of dividends. We are now seeing the exchange paying dividends now, which many investors were complaining for so long that since for the first 2 years that the exchange got demutualized, there was no dividends payments to investors. So now we're now seeing dividend something significant that shareholders will have cause to smiling about. Then we are seeing changes in the boards and management of the exchange. New industry experts are being brought on board to contribute their quota to the development of the market. These are people with seasoned experience in the market. And also, we also saw signs, we saw indication that the NGS has taken a decision to raise money from the market. I think it was it was, if you look at a special resolution from that meeting, it was expressly stated that the NGS intend to increase their authorized share capital to cater for the raise of a new injection of new capital from the market, whether by way of right issue or an offer to the general public. So we think that the exchange is making progress in the right direction, and we expect to see the impact of these changes are coming on the performance of the exchange itself as a listed entity and the market in general.
Okay. That was a brief summary of that. Thank you for that, Dr. Paul. Okay, now, so let's talk about an announcement that was made during the general meeting, the annual general meeting. Now, the NGX is unveiling plans to embark on a comprehensive digital transformation. So they want to go into using more technology at the NGX, which is a very good innovation. Now, I believe this will expand business operations and also will digitalize trading on the floor also. So can you also talk about this new innovation at this NGX? The use of technology to achieve its aim in terms of trading, buying of shares, and also when it comes to announcing public offers too.
Yeah, for long, the exchange has made it clear that by demutualization, it meant that they have a license to operate in the industry as a competitor to all the brokerage firms. So we expect to see the exchange is going to be being is profit driven, and to drive these profits, they intend to um, create access to the entire investment public, such that they could even go directly to the exchange to make their investors. They already have they have other platforms which many brokerage firms use to interface with the exchange at the moment. But what they are emphasizing on is a situation where clients can trade directly on the exchange without even going through a broker. Yeah. So that's the kind of robust technology and software they think they tend to come to introduce to the market. They intend to introduce software such that during IPOs or right issues or subsequent offers that comes into the market, that the use of financial intermediaries might be reduced. So you have softwares that can help help investor public to access IPOs, right issues, and other offers that are coming. Apart this, the primary market each side, then the secondary market side, ability for client to trade directly to the exchange without any financial intermediary, without going through a broker dealer.
Okay. So does this mean that when it comes to, for example, an investor coming into the market, they might not need to take any advice from the stockbrokers when it comes to buying shares with the
Yeah.
introduction of this new technology?
No, we for the broker dealer community, we embrace competition. We expect that. That does not mean that for clients that decide to go on their own and decide to trade with the exchange, yeah, fine and good. Today, most of the clients who are trading in markets today are highly sophisticated. Gone are the days where you have a lot of retail clients who have little knowledge of the market, who are coming to the market to just say, well, let's see what's. Most people who are trading in market today are highly sophisticated. They understand the market, so they take decision on their own. So when you have the exchange coming with such platforms, so many clients, we have some clients that will just feel that, okay, why not, so going through a broker, why not we go to the exchange directly and execute our orders. And then we also have a relationship with the broker dealer communities where we can see get advice from stockbrokers to complement what we are doing by trading directly with the exchange. But in terms of the software that we're expecting from the exchange has, the exchange has made it clear right from time that with demutualization, they are going to compete with the broker dealer community.
Okay, so yes, I understand what you have said. Yes, the role of the stockbroker can never be erased. Okay, so now you mentioned injection of new capital into the NGX. So there was the discussion of an authorization on the rights issue to raise a capital of over 10 billion naira and a resolution to increase its share capital to sufficiently accommodate the rights issue. So all these resolutions were approved, and also, like you mentioned earlier during the summary, appointment of directors and also ratifying non-executive directors and all of that. But let's focus on this injection of over 10 billion naira worth of capital into the NGX. Does this mean that there's going to be more? Yes, definitely there'll be an increase in trading, but is the NGX going to expand its many branches to diversify into other industries, not just trading on shares and trading of different companies' shares?
Yeah, I think the bulk of some of that investment, that capital injection that's come to exchange, we go into investment in technology. Yeah, investment in technology, having a robust platform to compete in the entire capital markets ecosystem. The exchange would want to even compete with likes of FMDQ, what the FMDQ is doing at the moment, that has colonized bond trading, FX trading, and trading derivatives. So the exchange will plan to compete in those market segments that where it has not really created a niche for itself. Today, at their peers, the emphasis tend to be in just equities trading, then a little bit of fixed income trading. So right now, the exchange wants to invest heavily in technology that would enable it do derivatives in the markets, then fixed income trading, FX, and being able to compete with emerging exchanges that are coming across the country. Then the bulk of those such funds that we raise again also will be injected into working capital for the exchange. Now that investors are seeing some improvement in performance, exchange making profits, they are not paying dividends. Improvement in working capital become for the exchange would position the exchange in better position to be able to deliver better return on investments to all the stakeholders.
Earlier last month, NGX made headlines by acquiring stocks in Ethiopia's Securities and Exchange, and this marked its entry into the East African market, reinforcing its commitment to drive growth across African markets. So let's talk about this now. This is something new that Nigerian exchanges acquiring stocks in an East African Securities and Exchange Group too. So does this mean that going forward in future, the NGX will also be acquiring shares in other parts of Africa, not just in East Africa, in North Africa, in Southern Africa? So what are your thoughts on this, Dr. Paul?
Yeah, okay. We're in an era of capital market integration. Stock markets are or platforms are being created for investors to participate in cross-border trading, cross-border listing, and you're having a lot of collaborations taking place amongst stock exchanges in maybe, like for instance, we have a working relationship with stock exchanges across West Africa. Other collaborations are taking place within Africa as a group. So that might have been a driving force for that investment decision. I am not privy to the content of that investment, and the exact rationale for that investment. But I think that the issue about globalization, capital market integration, cross-border trading, creating assets and possibilities for investors to trade, not just in their local market, but across several markets all over the globe, must have informed the decision of the exchange to invest in other African markets, especially like in East Africa. So we will not say this is just the first we're seeing taking place from coming from the exchange, from the NGX. We will not be surprised to see that kind of investment taking place, or such investment taking place in other exchanges across Africa. So it's just part of the drive for capital market integration in Africa.
Okay, so the stock market traded on a positive note this week that ended, let me say today, Friday, 3rd April. I beg your pardon, Friday, 3rd May today. So as I mentioned during the introduction, the all-share index appreciated by 0.35%. So now with this closure, with market capitalization closed at over 55.553 trillion naira. So what's in stock for investors in the coming week? I know there was a public holiday on Wednesday, 1st May, Workers' Day, so that didn't really affect trading. But today is Friday. Can we, will this trend, will the overall closure still be on a positive note as of when the final bell rings at the end of closure today, at the end of market trading today?
The market, as I speak to you at this moment, the market is up 0.30%, that's 30 basis points up today. The drivers is mainly driving force in these gains we have seen in market in recent days, yesterday and today, is the banking sector. We are seeing uptick in banking stocks, and the reason was that you know we just ended the first quarter results came in within the last 1 week. Not all have come, but we've seen results from several companies, say for a few, like some banks which are yet to release their first quarter results. And the results from UBA, from the results from Access and Stanbic, which are part of the flagship banks in the market, which were released last week, sent a signal on the pattern of results to expect. Access recorded a over 90% jump in their Q1 numbers. Stanbic also recorded a significant rise in their profit. So we're also expecting that when the result of GT Bank, GT, Zenith, and UBA is released, that we'll see a significant jump in the numbers. So the market is already reacting to that. That's why you can see that even when as GT Bank and Zenith were marked down, as of today, they've recovered the markdown prices. GT Bank is already trading at close to, as I speak to you, is already trading at 37 plus 37.60. Yeah, why Zenith is already trading over 34 naira. Access is trading, Access is already doing 18 naira. So these are improvements in the performance of stocks in recent days, are driven by current performance of the stock banks we've seen, and expectation that the other banks that are yet to come up with their numbers would sustain this trend. However, the overall macroeconomic environment is such that two forces would determine whether this movement in markets will be sustained. One of which is direction of interest rates, what's happening in interest rates, and the other one is exchange rates. When I say interest rates in the money market has been elevated for some time now. We've been seeing Treasury bill, 1 year Treasury bill doing as high as a yield of between 25-26%. Then that's the yield with stock rates at over 20.5, which gives us a yield of about 26%. While most CPs, commercial papers, that are being issued now, 1 year, 270 days as 9 months CPs are doing as on the average of 25%. So that makes that's made the money market more attractive than the investments taking place in the equity market. So you are seeing a lot of investors who are doing switches. They are reducing their exposure in equities, to getting some funds to go and place in money market to get higher return on investment. So if this interest rate is sustained at this level, market movements, market rally would be highly moderated in months to come, until we start seeing interest rates fall again, because the money market and the equity market are competing for the same fund. Then the other factor again I mentioned again is, outside interest rates, is exchange rates. Why I mentioned exchange rates is the play of FPIs in the markets, foreign portfolio investors. Foreign portfolio investors are significant players in this market. Though they have a select a niche in stocks, they do, like the typical likes of GT, Zenith, UBA, Access, and then Nestle, and some other stocks which they play in the market. What happens to exchange rates determines whether they will participate in the market or not. So once at some point this year, when we saw the recovery in exchange rate, what happened was that when rates were as high as 1.6, some FPIs who would not seen the market, who've not seen the market before, they came to the market, came in with a huge amount of FX, sold FX, started buying equities. But when Naira recovered significantly, falling to about 1,000 Naira, 111, they pulled back. So when they pulled back, the other those who were on the buyer side, the FPIs who were on the buyer side, they pulled back from continuing their purchase decisions in the equities market. Whereas those who have been trapped in Nigeria for some time use that as an opportunity to start selling equities. That's caused the sell pressures we saw in equities in the past about 3 weeks. The past 3 weeks. So because of the recovery in Naira, those were trapped. Those FPIs that were trapped before, we're trying to use that the better valuation of Naira to exit Nigeria. So now that interplay of we're trying to find a fair value of Naira that will encourage those who want to, the FPIs that want to come in, and those who want to exit to it. So once an equilibrium is arrived, we will now see improved activities in the equity market. We will now see improved participation of these FPIs. And if you have FPIs participating, you have your local PFAs participating, HNIs, then it makes the markets have more depth and robustness. So,
okay. Yeah. Dr. Paul. Okay, so let's take a look at how the Naira fared this week from Monday, Tuesday, and Thursday, and today, Friday also, how it was selling against the dollar. We're particularly going to focus on the price of the dollar since we're talking about the foreign portfolio investments and also the exchange rate. So now on Monday, we were selling, there was 1,121 Naira to $1. On Tuesday, it was 1,010 Naira to $1. And on Thursday, it was 1,010 Naira to $1. And on Friday, it was 1,010 Naira to $1. So what are your thoughts on this trend? I'm sure you would also say that this is the effects of the FPI on our exchange rate, with particular focus to the dollar for this week.
Well, as it stands today, the dollar is traded at FMDQ markets. So if you look at the rates that are being quoted there, the dollar is trying to find a stable price. I believe over time, with the interplay of the forces of demand and supply, with the interplay of forces of demand being shaped by participation of these FPIs who are bringing their money to buy either equities or physical, then with the dollar or the Naira will find an equilibrium price which we think will be stable for a reasonable length of time. What drives the demand for Naira is our level of importation. Our level of importation is still quite high, and our exports of exports of crudes has been quite abysmal. We know to meet our per quota, we're selling just roughly between 1.3 to 1.4 million barrels per day of crude, which reduces our amount of FS receipts to crude and from sale of crude to international markets. Meanwhile, our per quota is still as high as 1.8. So we have a deficit of almost about 600 barrels per day. So if FX inflow from export of crude does not improve significantly, if FPI participation does not, FPI involvement in our markets does not improve, during they can bring in the FX to start participating in our equities and fixed income markets, then the dollar will keep on being unstable until these two aspects are addressed. Then before the Naira will find some level of stability. We need to improve our FS receipts, reduce imports or constrain or moderate our level of imports, and also encourage both not just FPIs, FDI, foreign direct investments coming to Nigeria. These are the factors that will help to drive a stable Naira. What we need is not just the exchange rate doesn't what matter. The exchange rate at the moment is not what matters. but stability in the exchange rate. Once the exchange is stable, it makes it easy for investors to plan, to predict what the future direction of economic event will be, and that would drive stability, macroeconomic stability in the economy.
Very much, Dr. Paul Uzum, the Director for Halo Nigeria Capital Management Limited. Thank you for joining us on Market Insight this morning as we discussed how the stock market traded this week, and hopefully we'll keep our fingers crossed it will close on a positive note after the final bell rings. Thank you for joining us this morning.
Yeah, thank you.